Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from White River Energy Corp. Before we introduce our speakers, please note, submit your questions in the question box to the left of the slides. All of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Mark Silverberg, Managing Partner at ICR, Randy May, Executive Chairman, Jay Pucher, CEO, and Jack Corona, Petroleum Engineer of White River Energy Corp, which trades on OTCQB Venture Market under the symbol WTRV. Welcome, Mark, Randy, Jay, and Jack.
Thank you. Good afternoon, and welcome to White River Energy Corp's discussion at the Oil and Gas Virtual Investor Conference, hosted by virtualinvestorconferences.com. As mentioned, I'm Mark Silverberg, Managing Partner and Head of Energy, Sustainability, and Mobility IR at ICR. Before we get started on the discussion with White River today, I'll begin quickly with a few legal disclaimers on behalf of the company. Please note that the company's remarks made during this call, including answers to questions, include forward-looking statements which are subject to various risks and uncertainties. These include statements relating to our entrance into the oil and gas drilling industry through our acquisition of White River Holdings Corp., the expected results from and trends and developments in our drilling and production efforts and related activities, future plans for and anticipated transactions, and relationships with respect to our oil and gas portfolio and operations, anticipated macro trends in the oil and gas industry, the planned spin-off by EcoArc Holdings, Inc. of our common stock issuable upon conversion of its preferred stock, our plan and ability to uplist to a national security exchange, and our liquidity and capital raising strategies to fund our growth initiatives. Actual results may differ materially from the results predicted, and reported results should not be considered as an indication of future performance. A discussion of risks and uncertainties related to the company's business, which recently changed focus to an oil and gas drilling and production company following the July 2022 acquisition of White River Holdings from EcoArc Holdings, is contained or referenced in the company's filings with the SEC, including its quarterly report on Form 10-Q for the quarter ended June 30th, 2022, filed on August 12th, and its quarterly report on Form 10-Q for the quarter ended September 30 to be filed shortly. The company disclaims any obligation to update any forward-looking statements as a result of future developments. Okay, so with that aside, let's get into it. As mentioned, I'm pleased to be joined today by Randy May, Executive Chairman of White River, Jay Pucher, CEO of White River, and Jack Corona, Petroleum Engineer at White River. So before we get into questions, maybe let's start off with to get a better understanding of the leaders that we have with us today. So I think it would be great if each of you could give a little bit about your background and experience, maybe prior to joining White River. And so, Randy, we'll start with you, and then we'll move to JP and end off with Jack.
Sure. Thank you, Mark. Randy May. I actually am also the Chairman and CEO of EcoArc Holdings, a company I founded in 2011, took public in 2016, and then we trade on the NASDAQ under ZEST. Prior to that, I was in consumer products. I've invested in the oil and gas space since '94, and prior to that, I ran half the U.S. and largest retailer in one of their specialty divisions. With that, JP.
Thanks, Randy. Good afternoon, everybody, as well. My background is in finance, accounting, and mergers and acquisitions. I've got about 20 years of experience across those areas. I also have an MBA, and I'm a licensed CPA. I'm a former auditor and a consultant at both PwC and Ernst & Young, or EY, across the big four accounting firms. I've also, across the last 5 years, I've been either a CEO or CFO across multiple public companies and have a number of experience across multiple companies and sectors in that area. Jack, I'll turn it over to you.
Thank you, Jay. I'm Jack Corona, petroleum engineer, graduated Bachelor of Science in Petroleum Engineering. Small company focused, operations focused, drilling, production, completions, mainly Gulf Coast and Mississippi, Louisiana, and Alabama.
Perfect. Okay. Well, with that said, maybe Randy, let's start at the very top. Can you tell listeners a little bit about the White River business? In essence, the 60-second overview, if you will, of White River and what it is that you do.
Yeah, so White River, whenever we looked at the entry into the oil and gas space, we really wanted a hub and spoke model. We looked at several different sectors, and we identified Mississippi and Louisiana, in our opinion, the most underdeveloped area. And so the hub and spoke model we chose was something within a 5-hour radius of our field operations. We were about 80% vertically integrated. We manage our own wells. We have an operating company. We actually drill our own wells, and we produce our own wells. We have our own workover rigs. And so two of the major areas that we don't, that are not vertically integrated is the wireline services and the cement. We just chose not to go into that area for liability. And we operate north of 30,000 acres, most of which we have less than 2% on federal land. And we have depths of 3,000 feet to 20,000 feet. We have various formations from Austin Chalk to TMS to Frio, Wilcox, and it's further developing fields that have been in existence for many years.
Great, very, very helpful, Randy. So JP, needless to say, there's more to White River than just the three of you. So can you briefly maybe share more about other key members of the White River team?
Yeah, absolutely. So in addition to Randy and myself, Jack's on the phone. Jack's going to be taking a much more senior role within the company by the time this summer rolls around. We've also got Elisa Horgan, who's our Chief Administrative Officer. She's actually going to be moving into the broker-dealer that we're acquiring sometime this summer. We have Stanley King, Jimmy Lawson, and Larry Parker. Both of them, or all three of them, have between 20 and 30 years of experience, specifically in oil and gas in Louisiana and Mississippi. We've also, Stanley's the geologist, Jimmy's the senior landman, and Larry is the drilling superintendent and head of field operations. A couple of other key members of the team, we've got Michael Pollock, who's in charge of financial reporting, and our external legal counsel at Nason Yeager is very critical to the business.
Great. Thanks, Randy. Thanks, JP. Randy, maybe over to you. Definitely a strong team on board, as JP just walked through there. Maybe let's turn back to you and hit a bit on the assets and the industry. And I think you kind of hit on some of this in your opening comments there, but can you share a bit more with listeners about what initially attracted you to purchasing your first upstream oil and gas assets several years ago?
Yeah, so Mark, it's probably when I think about I've been investing since '94, and the oil and gas business is interesting from a perspective. There's really event-driven factors, whether it's natural disaster, politics, economic impacts. It's not like bananas that have a shelf life and they go bad. Whenever these factors come in, you get price fluctuation, but it creates these events within the industry that cause assets to lose value. And we're really looking for an entry point. And when you think about, whether it's a hurricane or COVID, or just last week, you had some of the banking crisis that impacted what people believe their assets are worth. Really and truly, demand didn't change. Supply didn't change significantly, but all of a sudden you wake up and your asset is at a different value. So what we looked at is really when was the best entry point. And JP and the team, we went on kind of I wouldn't say a buying spree, but we went on looking at assets that we could acquire during those downtimes. And we were very fortunate. We acquired assets from a company that was spread out. They had assets spread across the country and in various different basins. And again, when I mentioned that we wanted a hub and spoke model, and we really, really enjoy operating in Louisiana and Mississippi, and our team has, Jay mentioned earlier, our geologist has got more than 30 years experience in that area. Our drilling superintendent, same thing. And obviously Jack, coming out of Louisiana, has a complete understanding. So that's really what was important, is when do you go after it? And then the vertical piece of it is controlling your cost. Our cost per barrel, extraction cost, we know where we're at, and we're very, very pleased. We're in a position where, oil can fluctuate by the day. And then the other piece that's important is further developing. We didn't want to do any exploration. The results on wildcatting are not good. And it doesn't matter if oil's $200 a barrel. If you drill a dry hole, it doesn't matter. So, oil price is going to fluctuate, but if our cost per barrel of extraction is competitive and low, then we also like where we're at in close proximity to the refineries.
Thanks, Randy. I think that transitioned nicely and maybe hit on some of it in there, but maybe broaden out the question for all of you. Just views from the group on the oil and gas markets. Needless to say, they've been dynamic over the last few years, if not even the last few months and quarters, specifically in the Louisiana, Mississippi markets. There may be areas that the wider industry may be less familiar with. And I want to wrap that into a question we received here that may be best for you, Jack, which is, a skeptic may say, if the prospects are so good in Mississippi and Louisiana, why don't you necessarily see some of the major oil companies play there? And so it's a bigger picture question on some of the regional benefits of where you focus. And maybe
right.
Right.
So that's a great
Jack,
question.
Start with you.
Thank you, Mark. That's a great question, and we hear it a lot. Why are you guys here? I don't see any major oil companies in the area, and what a lot of folks don't understand is this is where the majors got their start. They learned early on that it's better to buy than rent, and what we deal with daily is JV partnerships, because the majors bought minerals in the area. The truth is they never left. They're still here. Most of our leases are leases of Mobil, Exxon, Humble, very, very large companies who still earn revenue from these properties. This is true on a lot of the legacy assets, not so much on the frontier unconventionals of the Tuscaloosa Marine Shale and Austin Chalk, but very true to the legacy multi-stack pay fields. So the answer to that question is they're still here, and we partner with those companies on a daily basis. They maintain their infrastructure as far as the refining capacity. So that's very important. We're within 2 hours of probably the most refining capacity in the United States.
That's helpful color. JP or Randy, anything you'd kind of add in terms of how you kind of view the regional specific focus of White River?
JP?
Yeah, I would say a couple things. In terms of cost, I mean, we owned assets in West Texas. We actually pulled out of there on purpose, just due to the super majors fracking over there. From an expense standpoint, whether it's labor, outside services, equipment rental, depending on oil prices, you could see 2, 3, 4 times the cost that you would pay in Louisiana, Mississippi, just over in West Texas. That's not a cost structure we want to compete in. We'd much rather be the big fish in the small pond in Louisiana, Mississippi. Everybody knows White River there. We've got a competitive advantage, in our opinion, in terms of hiring the best individuals. Everybody wants to work for White River, in our opinion. we've also got a competitive advantage in terms of going and finding some of these hidden gems, some of these oil and gas mineral leases that never even hit the open market, because our team is so entrenched in the Louisiana, Mississippi area, has the connections, and it allows us to really go in there and have a competitive advantage that we would never have in West Texas. Randy, anything else?
Yeah, the only thing I would add is that our experience in Texas is that we get a premium on the oil in Louisiana, Mississippi, over West Texas pricing. And the other piece is being very close. We I would just tell you it's very efficient being 5 hours from our field offices. And if you've ever operated in West Texas, you may drive 5 hours to get a hamburger. So it's not. It's much more efficient, and you get a lot of experience that want to be around the Louisiana, Mississippi area that you don't necessarily get in the West Texas area.
No, that's great. That's great color, everyone. Randy, maybe let's stick with you, and you hit a little bit on there in terms of some of the price differentials that you see in the basin. More broadly, the commodity markets, as mentioned earlier, have been extremely dynamic over the last few years, right? Even going negative $65 at the height of COVID concerns. And so, can you expand on how you see the energy and commodity markets and some of the critical factors driving it over the next few months, years out in the future?
Yeah, Mark, this is a question. I think if you run into somebody that gets this one right, it would be if you talk to 15 analysts, they're all going to have different opinions. The reality is you really can't nail down the critical factors that drive oil pricing. What we can do is make sure that our extraction costs maintain in the low 30s. And we're doing that. We also address, as you get to a critical mass, what do you do for storage? Because these things don't last that long. Oil price goes down. If it's down 30, 40 days, you're okay. I don't believe that $150 oil is good for anybody. I mean, June of last year, we were at $122 a barrel. This time last year, we were in the mid 90s. So you still have that idea of, $65, $75 oil. I think we're going to see that. I think we'll see $85, $90 oil this summer. And that's okay. But anything that goes over, in the high hundreds is really not good for anybody, in my opinion. It's not sustainable. And it's not like when it does hit, you see a lot of companies, they go out and start going on a buying spree. But drilling for oil is typically 6-9 month lag before you see the results of your efforts today. So we look further out, and the really important piece is that we pick up assets at a favorable value, and that's what we've done. And we continue to maintain our extraction cost in the low 30s. And I think we'll do that, and the rest of it will take care of itself. But as far as projecting oil pricing 5 years out, I've been looking at renewables since the 70s, and that's a really tough grind. In the 70s, you had the cars become much more efficient, and now they're more efficient. But in the 70s, you had households that had 1.5 to 2 cars in a 5-person family. Now, if you have 5 adult families, you have 5 cars. So there's more vehicles on the road, even though we're more efficient. So I don't see renewables taking the place of fossil fuels anytime soon, at least not in our lifetime. It's still the most efficient way to run logistics, and it's still the most efficient energy. Are they going to make progress? Sure. But I think, so that standpoint, I think you read some of the political aspirations as to be fossil fuel free by 2030, 2040. I haven't seen the economics work out to see that come to fruition. So I think the long and the short is we just stick to what we're doing and be efficient, and don't get aggressive on on exploration, do further development, and we'll be just fine. And like I said earlier, if you get aggressive on going after wildcatting, it's a 1 in 10 hit rate if you're lucky. And so if oil is $100 a barrel and you hit a dry hole, it doesn't matter. Or if it's $30 a barrel, it doesn't matter. So I think, just in my view, it's you talk to 15 analysts and you're going to get 15 different answers. So
I appreciate that color, Randy. So I think a couple things to unpack in that answer, but maybe let's start with one of them. Obviously, you talked about, finding the right rock, so to speak, being in the right places is first and foremost. But maybe, Jack, one for you. Can you expand a bit on how you, as a business and as a company, monitor, mitigate, and manage some of the commodity price volatility that is just inherent in what it is that you do? What type of commodity exposure do you have in the business, and any general comments on some of the regional dynamics and markets for the commodities that you produce?
Yeah, Randy touched on you've got to maintain your position. You've got to embrace this volatility. Those two things are key. When prices dip, it's those relationships with other operators who may be looking to divest, and you've got to have the equipment, the labor to be able to capitalize on that. That's first and foremost. Keeping your lift costs down is critical. That's how you stay in the game with dips. So we're constantly looking at evaluating how do we lower lift cost, making sure to take every advantage of existing infrastructure and what we can do there. But also more on the marketing side, a little further downstream. We discussed this. We're in the refining corridor of the Gulf Coast. Well, there are larger refiners and there are smaller boutique refiners. Some of our heavier oil we send to smaller boutique refiners who may turn it into asphalt, or they may turn it into transformer oil. It's ultra specific, but those small moves, you're able to gain $2-3 a barrel, and you've got to take advantage of that, and you've got to seek that out. So that's kind of in a nutshell. It's you've got to be vigilant.
Appreciate that, Jack. Maybe JP, let's go over to you really quickly, just kind of real time here as we're getting some questions. It looks like folks are interested in learning more and are having just want some clarity on the ticker. How do you? I know it was mentioned up front, but could you just kind of reiterate, how to where White River trades in the ticker for the company?
Yeah, White River Energy Corp trades on the OTCQB right now. The ticker symbol is WTRV. We actually spun the company out of EcoArc, as Randy mentioned, the NASDAQ company, in July 2022. Only took us about 90 days or so to get uplisted from the OTC Pinks to the OTCQB. Randy and I actually uplisted our last company, EcoArc, straight from the OTCQB to NASDAQ in August 2021. And that's our ultimate goal with White River, is to do the same. We believe and our plans right now are to uplist the company naturally based on hitting the listing requirements. We don't have any plans at this point to try to do any type of underwritten capital offering or dilute our shareholders to do an uplist. Based on our experience and confidence of getting companies up to listed exchanges, we believe we have and will have the fundamentals that we can get up naturally, possibly around early 2024.
Thanks, JP. Maybe we'll turn it back to some of the questions here, and Jack, let's maybe stick to you. We're getting some questions just on general performance of the wells in which you drill. What can you tell the audience about production levels that you've seen from some of the wells drilled to date, or just generally, types of performance you're seeing in the areas you operate?
As expected, really no surprises. We've just recently drilled what we called our AMI 12, number 18. That was a multi-zone test. to about 13,000 feet, and we had a known zone that we knew we were going to set pipe on. Was there. We saw shows in some deeper zones, but it didn't seem to be commercial in that well. But we did have pay that we ran pipe on, and we're moving the drilling rig off there, moving the completion rig on to complete and test that well. Let's see, our 20-9, another recent well, another multi-stack pay. One of the lower zones has been tested there, and we're likely going to move uphole in that well to test another zone. But both look great on the log. The main field pay is where we're going to next, so we've got high hopes for that. And then more drilling to come. The drilling rig is about to drill about a 12,000 foot test in an older multi-stack pay field with 8 zones to test. So that's probably going to be our most exciting drill of the quarter. We look to get started hopefully at the end of this month. We'll have spud that well.
Great. Jack, maybe sticking with you and going back to one of the questions or one of the areas that Randy hit on before, just around energy transition. Needless to say, it's been around for some time, but seems to be accelerating. It would be interesting, I think, from your perspective as an engineer to hear your views in what Randy mentioned before in terms of how you see the evolution in the energy space taking place over the next decade or several decades. If you could.
Yeah, I see it. I see a lot of what we've seen before. Gulf oil and refining was big in this area in the Gulf Coast, and they specialized in. They were multifaceted. They really specialized in different lubricants and used every component of that barrel. And searched out different barrels for specific needs. I see that, and then I also see our transition into natural gas. I think that's going to be our bridge, and luckily, Louisiana, Mississippi has some of the most potential for that. Lots of opportunity and existing infrastructure there. So. I see us trending from specialized crudes, searching out for special crudes, and then kind of transitioning into pure natural gas.
It's insightful. Appreciate that, Jack. And so, look, we have 2 minutes left, and so I think I want to use it in this way, and maybe end with a question for all of you. And Randy, specifically with you, I'll start with you, but if you could incorporate comments around growth, because we have gotten comments on just, what are the drivers of growth, but, why invest, right? We're at a investor focused conference right now. What would you mention in terms of some of the key investment highlights or attributes for White River? And we'll start with you, Randy, and I'm going to time you. So you got 30 seconds. Go ahead.
Okay. Yeah. So, you look at a hub and spoke model. We talked about that, vertically integrated. The other piece is that we've got a private equity fund, that it's a private public model, and Jay, I'll probably get you to speak on this a little bit, that essentially the fund is focused totally on supporting the drilling efforts for White River, and we'll also have the opportunity to see entry points into merger acquisition. So if you look at a team we put together, this isn't the first time you put together a great team of folks. You find an industry, you put together experts in that industry, and then you find the entry point. And that's really where we're at. It's a young company and with tremendous experience in a mature area in developing fields. It's not wildcat exploration. So, Jay, you may.
Yeah, and to add to what Randy said, we always get the question, what makes White River unique and why would I want to invest in this company? And I would challenge people to say, how many regional oil and gas public companies do you know of that are running this public-private model? I mean, we're closing on a broker dealer in the next couple months. We have this private equity fund, which is a manner to bring money in and greatly expand the company in a minimally dilutive manner to shareholders, as Randy mentioned, and we're vertically integrated as well. So in addition to having the entire team, we've got our own workover rigs, our own drilling rigs, and the three guys on the phone are intimately involved from the very beginning of the process of prospecting all the way through drilling, completion, operations, workovers. So this is a very hands-on team and a very unique company. And as I mentioned, I challenge anyone to find a company that's running a model like White River. And this has just started since it spun out in July 2022. And I think we're off to the races right now. Jack, anything else?
No, very very well put. We've staked our flag in Faraday. We're trying to build a brand in Faraday. We want to include refiners, mineral owners, and it's very simple. Everyone has to win. Everyone has an opportunity to make money. So from the mineral owner to the refiner, the very most upstream position to the very most downstream position, you've got to be that line of communication for all. So that's it.
Yeah, appreciate that, Jack. Look, we're on borrowed time, so I want to be respectful of who's behind us here. So really appreciate the conversation today. As you can tell, we can keep going here, but let's keep it there. Thank you everyone for attending, and have a great day.
Thank you, everyone.